Welcome back to the cryptoworld channel, everyone. My name is Josh, and right now this on-chain metric is beginning to reverse, which will be very important to pay attention to moving forward. We also have the US stock market open up in the green today, and the Ethereum short positions at record low levels on this exchange. All of that and more in this video, so definitely stick around. Just starting off with the stock market today, this right here is the Nasdaq 100 index on the daily time frame, and as I said in the intro of this video, today has actually been a green day for the stock market. We have been experiencing a bit of a short-term bounce, but obviously it goes without saying at this point that this is not a confirmed bullish reversal or anything like that. This is just a short-term bounce for now, and in order to confirm an actual reversal back into a bullish trend, we need to start forming higher highs and higher lows here on the daily chart, which we obviously have not seen as of right now. But really, for the stock market to flip overly bullish again, we actually need to see inflation start coming down and the Fed start easing a little bit. Because while the Fed is doing quantitative tightening and raising interest rates, of course, that is adding an extra sell pressure to the stock markets. And so moving forward, especially over the next few months, I'll be paying strong attention to the Fed meetings and, more importantly, the inflation data, the CPI that is coming in each month. And the next CPI release is in around 3 weeks from now on the 13th of July. And what we can also see here on the Nasdaq 100 index on the daily time frame is actually a small bullish divergence, because obviously we formed lower lows and we've seen higher lows in the RSI. So technically speaking, this means in the somewhat shorter term, we should be due for reduced bearish momentum like what we're seeing at the moment with a small short-term bounce. And this is, of course, quite similar to the short-term Bitcoin price action. Here on the 12-hour chart, we have a confirmed bullish divergence, which has been playing out over the past few days. And on top of that, around 1 to 2 days ago, we saw a bullish cross in the 12-hour Bitcoin MACD, which is obviously more of a bullish signal than a bearish signal. But keep in mind, we saw both of these signals, the bullish divergence and the bullish cross in the MACD, on the 12-hour time frame roughly around a month ago. And like I said in yesterday's video, this basically led to more choppy sideways price action in the shorter term, which is mostly what I'm expecting moving forward over the next few days. And if you're zooming out to the weekly Bitcoin chart, not much has happened since yesterday. And so technically speaking, according to pretty much the last decade of Bitcoin price history around these important moving averages, right now the Bitcoin price is still trading within this area of maximum opportunity. And this area I'm talking about is in between the 200-week moving average and the 300-week moving average, which are coming in at around 22,500 and around 16,500 respectively. And once again, historically speaking, we see some of the most significant Bitcoin bottoms around these moving averages. The 200-week and the 300-week moving average are some of the best possible buying opportunities according to Bitcoin's history. Now, of course, that is talking about the past, and nothing is ever 100% guaranteed, so that is not financial advice, of course. But with that being said, taking a look at this important Bitcoin on-chain chart, which shows us the percentage of Bitcoin supply that was last active over 1 year ago. And so basically, if you bought a Bitcoin over 1 year ago and you have not moved that Bitcoin in 1 entire year, then that would show up in this metric right here. And you might be wondering what this actually means for the Bitcoin price. And basically, during the bearish times in the market, especially in bear markets, but even just in boring sideways times in the market, we usually see this on-chain metric spike to the upside, which is once again the percent of Bitcoin supply that was last active over 1 year ago. So basically, in the boring or bearish times in the market, like bear markets, for example, it's very common to see the Bitcoin supply become less active during the boring or bearish times in the market. And then what we see in this on-chain metric is, of course, it starts flattening out, and during that time in the market, there's more older coins start moving around. And during these times in the market where we see the older coins start moving around more and this on-chain metric start turning around to the other side, that means we're about to flip more bullish again in the Bitcoin price action, as we've seen time and time again. Because generally speaking, it's heading into the bullish price action where we see the long-term holders start offloading some of their Bitcoin over to the new Bitcoin holders. And we especially see a lot of that happening towards the top of a bull market, which is why the percent of Bitcoin supply drops to the downside towards the top of a bull market, because more of Bitcoin supply is moving around amongst new investors. So just quickly going over the last decade of Bitcoin's price history, towards the end of 2012, entering into early 2013, we saw this on-chain metric begin to reverse, and what came next was, of course, the 2013 bull market that happened pretty much over the next 1 year. And then as this on-chain metric was flattening out and beginning a bottom, that was telling us we were about to get ready for for our next major bear market. And of course, that bottom in this on-chain metric was in early 2014. And that was right towards the beginning of the 2014 bear market that lasted for the rest of 2014 and into early 2015, which is where this on-chain metric had already spiked to the upside during the bear market, but it began flattening out during 2015 as the bear market was basically bottoming out. And then when it really flattened out and began reversing, that is when we started to enter towards the 2016 and then 2017 bull market. And during the main part of the bull market in 2017, we saw a massive drop off in this on-chain metric, which once again shows a lot of older coins moving around into newer hands. And then as this metric began slowing its downwards movement and began bottoming out, that was when the 2018 bear market was beginning. And then we saw a spike to the upside in this on-chain metric during the bear market. And then right around the end of the 2018 bear market, we saw this on-chain metric begin to reverse again as the Bitcoin price flipped much more bullish. And then we entered a very boring time period in the market in the second half of 2019 and early 2020. So for the most part, during that time period right there, we saw this on-chain metric begin to climb. But as it began flattening out and reversing back to the downside, that was telling us we were getting ready for our next significant bullish move in the Bitcoin price. And then after we played out a lot of bullish price action, when the Bitcoin price got up towards around $60,000, we saw this Bitcoin on-chain metric begin reversing back to the upside, which was showing more bearish price action to come. But right now, it is beginning to reverse back to the downside. And once again, every single other time where we've seen this on-chain metric reverse back to the downside throughout the last decade of Bitcoin's price history, we've seen more bullish price action for Bitcoin later on in the coming months and years, according to this on-chain metric time and time again. And obviously, this is just one chart out of many charts, but let me know what you think about this chart right here in the comment section down below. And if we're taking a look at the Bitcoin long positions on the Bitfinex exchange on the weekly time frame, these traders on this exchange in particular seem to agree that we could be due for some sort of bullish reversal. Because what is really interesting is right now these long positions are actually at an all-time high level. In fact, right now there's nearly 109,000 Bitcoin sitting in these Bitcoin long positions on the Bitfinex exchange, which is equivalent to over $2 billion US. And for any of the beginners out there, all of this money right here, $2 billion worth of Bitcoin, is essentially betting on the Bitcoin price going up. But I want to make it clear that this chart and the last two charts that I covered, this on-chain chart and its weekly Bitcoin chart, they are all long-term Bitcoin charts. Because once again, when it comes to the shorter term, I'm mostly expecting choppy sideways price action over the next few days, maybe even over the next couple of weeks, depending on what the stock market is doing. And these other Bitcoin charts, once again, are talking about the longer term, as in at least a few months from now, but potentially over the next couple of years. And if we're getting into the short-term Ethereum analysis today, this right here is the 12-hour Ethereum to US dollar chart, and it's basically the same thing as what I said yesterday, so I won't drag this on too long. Once again, we still have an active bullish divergence in play and a bullish cross in the 12-hour Ethereum MACD, which is very similar to what we saw around a month ago, just before we experienced a lot more choppy sideways price action for Ethereum, especially over the next few days, is what I'm mostly expecting. And we still have strong support at around $1,000, more specifically at around $1,050, due to this 38.2% Fibonacci level coming into play at around 1,050. And obviously, the weekly Ethereum RSI is still well and truly in oversold territories like Bitcoin. And if we're staying on the weekly time frame, but taking a look at the Ethereum short positions on the Bitfinex exchange, right now they're basically at all-time lows. And once again, if there's any beginners out there that don't know what a short position is, it's basically betting that the price is going down. So an Ethereum short position is betting that the Ethereum price is going down. So if the whales over on Bitfinex have closed almost all of their short positions and right now sitting at record low levels of short positions, that means that these traders on this exchange in particular are not feeling very confident that we could see more downside price action, because of course their bet on that downside price action is very, very small right now. In fact, it's the smallest it's ever been on this exchange in terms of Ethereum. And if we're looking at the last all-time low level for these short positions on this exchange before we broke it, that was right at the end of 2019 entering into early 2020, and looking at that same area on the Ethereum to US dollar chart on the weekly time frame, that was right around here as the price of Ethereum was essentially bottoming out, apart from that March 2020 crash where we did actually go a little bit lower, so just keep that in mind. But during that entire time period in the market, the room to the downside on the bigger picture, the weekly time frame, the longer term chart, was somewhat limited. Now, unfortunately, that can't necessarily be repeated for the Ethereum versus Bitcoin chart on the weekly time frame, because clearly if you're looking at this bear market compared to the 2018 bear market, we technically still have more room to the downside because we have not actually seen much downside price action for Ethereum versus Bitcoin here on the weekly chart compared to the last bear market. Now, keep in mind, Ethereum was not around for the 2014 bear market, so we really only had the 2018 bear market as our only other significant bear market throughout Ethereum's history. So unfortunately, when it comes to Ethereum, we don't have a lot of data points to compare, which exposes us to potential inaccuracy. But anyway, if we do take a look at the 2018 bear market, what we saw around the weekly RSI was the fact that we did actually enter into oversold territories during the end of the 2018 bear market right around here. But obviously, even at the end of the 2018 bear market, when Ethereum and Bitcoin bottomed out against the US dollar and started heading back to the upside, we still ended up seeing one more significant drop-off for Ethereum versus Bitcoin over the next 6 to 8 months. And once again, I wish there was more bear markets to compare to for Ethereum, but unfortunately, we only have that 2018 bear market to take a look at. And so just keep in mind what we actually saw in the 2018 bear market and what we saw even after that bear market and what we've seen this year alone. But of course, I would still be paying strong attention to this level of support coming into play at around 0.049 Bitcoin per Ethereum. And make sure to check out this video popping up right here on your screen if you want to find out how you can keep making money in crypto even if prices are going down. But anyway, that is everything that I have to say for today. I really hope you enjoyed and I'll see you all in the next video.